Hey guys, what's up? What I want to do is go over my strategy for the opening of the SPY. I normally use the fibs, but with the fibs you have to wait for a decent opening and close, or high day and low day, I should say, to draw your fib levels for retracement. And I've found that I've been missing out on a lot of runs in the morning, so I try to do some research on different strategies for the opening. And the one I like the best is the orb or opening range breakout. And how you play that one is you do the 3 minute, 5 minute, or 15 minute time frame, and you wait for the first bar to close, and then the very next bar you wait for it to either break the low or the high of the previous bar, and then you enter in that direction. So on this day here, I believe this was Friday. So for example, the 3 minute chart is what I use. The first bar closes, the very second bar, it ends up being an inside bar, so there's really no direction. And when that happens, what I'll do is I'll take the third bar. Again, it really didn't break that first bar's, and I go by the actual bar closing, not the wick, and it didn't break that, so I wouldn't have gone in on that Friday. Of course, I didn't trade at all Friday, but it wasn't a good attempt to get in on opening range on that day. The previous day was almost the same thing, except it was green. It went, closed green. The very next bar, it didn't break the high or low, and then the third bar didn't either. So you really can't play it that day. And then previous day of that, 3 minutes, first bar closes, the very next bar breaks that first bar. So, for example, on this one, once it breaks that first bar, so halfway between this bar as it's forming, so 417.77 level, it breaks. You'll be making your entrance for a call. And when you do that, or when I do that, what I would do is I would draw a fib on the first candle because that sets up my stop loss too. Let me zoom in and show you. So on that first candle, what I'll do is the stop loss for me would be the 786 retracement level right below it, because sometimes what will happen is it will come back and touch that 786. And if a candle closes below that 786, that's whenever I get out, because obviously with options, you can't pick a certain price point to get out. You'd have to, your option, you have to pick your option price. So I just watch it, and once it breaks and forms a candle below that 786, 786 level is when I would get out. And also, I use it for profit taking. So for example, getting in on this second candle, what I will do is draw the fib to the top of that second candle. And what I like to do is use the extensions as my profit taking. So the first one is the 169, and that's why I have it color coded in green. Green, take money. So once it hits that point, I would get out. On this candle here, as you can see, it's a strong candle and it's actually pushing above and past that. So I probably would have held since it's being a strong candle. And then I definitely would have got out all of my profit here. How I've been doing it is I would take three contracts and I would sell two of them. For example, if this candle would have hit that 169 level, I would sell two here and leave a runner on and until it pulls back against me and then sell it. So, for example, at one runner, I would have left running the whole way up, and then once it started coming back down is whenever I'd sell that one runner to get out of it. But that's how I play the orb. And I'll just take you back a couple days just to show you um, the strategy, if it's going to work or not, because no strategy is 100%. And anybody that tells you, yeah, this strategy works 100% of the time is full of shit, because I don't care how good it is, Nothing's going to be 100%. So on this day, obviously that first candle, closes. The very next candle, it breaks it. So this one, I actually got in on this trade here. I remember it. So I got in right when it broke the previous candle low. I got three here, and I drew my fibs for my take profit. So once it come down and touched this 169, I sold two of them, and then it kept going. And then once it hit this, I think it's the 382 level, I ended up selling my runner just because it was, I don't know, I was happy, I guess, but I guess I could have let it run. But once it hit that level, I was like, well, it's good enough for me. I'm getting out. And I ended up getting out on that candle. However, guys decide to do your risk reward for stop loss or when you take profit. I mean, obviously, you don't have to change that. You can use it, whatever strategy you use. Your risk reward is your risk reward. So I'd keep that the same, however you use it. The biggest thing is your risk part. Make sure you really honor your stop losses because how you manage your losses is basically how you grow your profit. Because if you're a hold and hope type person and it's not going in your direction, you're going to hold and it's already blew past where you normally stop out, but you're still holding. You're just it's just going to eat into the profits that you're making. So what you want to do is make sure you have that set stop loss and you honor it and you get out of your trade when you can, or at that stop area because that's just going to benefit your profit strategy also. So let's look at the previous day. What I'm wanting to do is try to find a day where it didn't work out for on the previous day. Obviously, it did. There's a 3 minute, as you can see, it broke it here. It come back against it a little bit, but it still didn't hit the stop loss. So you enter here. The next candle, it started coming back again. So for me, example, if I got in here, initially I was green, but then I turned red, but it didn't hit my stop loss. So I would have held in through all that and I would have got out right here at this 169 level and then at the 382 level. The 382 level with the fib is on the retracement side of it is a good bounce point. Um, Actually, it's the 272 and the 382. These two here, once it goes to that area, it likes to retrace or bounce off of it. Notice that, but that's in a totally different. I'll have to talk about the fib strategy in another video probably. The previous day of that, again, would have been a decent runner. So far, these orb strategies been working out. On this day here, if you get in right at the break of that candle and you take a quick profit, it would have benefited you. But as you can see, it's not going to be a huge runner like the other days were, but still it's some profit. On this day here, it did not break it, so there would be no entrance of an orb strategy on that one. On this day here, obviously you would have taken it and it would have been a good one. I'm trying to find where one may have been a losing trade. This day here, you would have gone in. It would have been a quick profit. All right, so this one here. So 3 minute candle breaks, or the second candle breaks that first additional 3 minute candle. So you would get in at that break point, and then your profit would have been up to you. So if you would have gone in at the 443.71, those candles, 444.61, so it's almost a dollar move. So you probably could get away with a quick scalp on that one also. Um, So that probably would have been a decent winner. Let's see if there's a one where if you got in, it turned against you. So that's a winner. It's crazy. I didn't think there was that many days where the orb strategy would have won. There's a winner. I guess I'd just be shrinking them up like this to see. And I shrunk it too much. There's a winner. There's a winner. So if you could see, if we're comparing winners and losers of this orb strategy, um, uh, the winners, and when they do win, seem to run. So your risk reward by using this strategy actually would pay off pretty good, even if you have a one that stopped you out. Uh, the other ones actually ran pretty decent to where you make some decent profit on it. There's a winner. All right, this one's looks like it'll be a quick winner. All right, on this one, obviously you get in there and it's still a decent. What size maybe 456.43 to 457.15, and then it started coming back. So I mean, I would have gone out on it as it's coming back here probably, but especially since I was green up to there. But if you would have held it, you could have held it up to here before it come back on you. So again, depending on your risk reward, um, it would have paid off for you. This one here looks like it would have been. So you would have. Here we go. This is the first green candle. The second one, it wicked below it. So if you play the wicks, like I said, I like to try to play just the bodies. But that wick below it, if you decided to get in at that wick below, that would end up being a losing trade for you. That's why I kind of like to trade the bodies because, the wicks is a telltale sign too. If it's wicking, that, hey, a lot of you try to go that direction, but then got, beat back. On this day here, I I don't think I would have got in on it, even though it would have been a gainer if you would have took it. But that candle there, a lot of indecision on what direction it's going. But if you would have got in on that wick, it could have been a winner. I know I wouldn't have gone in on that one. But as you can see, I mean, a lot of times, especially with SPY at opening, SPYs, a lot of times it runs in one direction or another, before it pulls back. Uh, this day here looks like it would have been a winner. Here's your 3-minute candle, formed below it. If you would have got in, and on this candle, because the body broke below it, it's already at 457.72 time area, and if that wick there is 457.15, so you're talking, what did I say it was, 457.70, 457.17, so that's not really a big run, but it's still profit. And then if you were held through all that, which I think I would have stopped out because 786 level. This green candle here would have, no, because it didn't close. I was just wicked above it, so I wouldn't have stopped out there because it wouldn't have closed. Yeah, because my stop loss would be above that 786, but I wouldn't stop out on a wick like that. If the if that was the candle closing, I would have got stopped out there. But since it's this wick, I wouldn't have. Um, So that's the whole idea of the orb strategy is you take after that, first candle forms, you take the second candle. If you really wanted to add more to the strategy itself, you can go in and say that that candle has to open up outside the previous day's low or high. And what that theory is would be, we'll just say, for example, this green candle here, the strong green candle, say the next day it opened up below this low day down here somewhere. The theory behind it is that these people up here bought calls or stock, they're trapped because it opened up below it. So their stop loss, or they're like, oh shit, I better take money, you know, they'd start selling their stock or their calls, which would then push this price down even more. So depending on how you want to play, you can play it two ways. You can just play regardless. You're just going to play that orb strategy of after that 3 minute candle breaks, or like, again, if you played 5 minute or 15 minute candle, if we switch over to 5, which is probably going to take me back to Friday. I think TradingView does that. Let's see here in the auditors. There we go. Yeah. Well, 26. So you can play it on a 5 minute candle or a 5 minute time frame, and you can play it on a 15 minute time frame. So your choice on what you want to play it on, and if you want to choose to play it, if it breaks the high of day and low of day, then get in. But just from me showing you this video here, which normally I would play, you'd have to break the high day or the low day, but it looks like regardless, any time will be a decent time to get in. Just make sure you have a good stop loss. And that's the orb strategy, opening range breakout. If you guys decide to play it, I mean, and make some money, I hope, cool. If you guys don't decide to play it, cool too. But that's just a strategy I use. I like it. It's worked. It worked against me a couple times where I stopped out, but all in all, my profit taking has been a lot better. And then I'll have to make another video showing how I do the fibs, because the fib video I created earlier, I think it was just on a training day, um, and it's already 18 minutes into this video, so I'll keep it kind of short. I'll make another video on how I play my fibs, and then the Holy Grail strategy too. I think I'm going to start playing that again because it worked out pretty good when I was playing that before. And I combine that with this TEMA indicator, which is this histogram at the bottom of my um, chart here. And what that is, it takes the average of 3 Hall EMAs and creates this histogram of whether it's red or green. It's kind of like a MACD, except it's different. I guess it's faster than the MACD with the price action. Because you can see here, like on this day here, it's red, red, red. The MACD is green. Of course, this is a 15 minute chart, but the TEMA is what it is. It's still red. And as you can see, it's just Chop City right in here, going back and forth. So I combine it with the MACD and the stochastics because if they're all in agreement, that's a pretty strong indicator that it's moving in whichever direction, and then you can play it. It's just been helpful for me also. But I hope you guys make some money, and if you use a strategy, let me know in chat. Hey, I used the orb and it went for me, or maybe you say, hey, I used the orb and it went against me. Like I said, if it does, it sucks. But remember, nothing's 100% certain. So good luck to you guys tomorrow and make some of that money.